Hey everybody, Courtney Smith here with our April 18th edition of Wall Street Winners. We're just rocking and rolling here. And this is rocking and rolling for sure. So what I've been telling you is lately is that I think that the bear market is in place. We might have had another week up, but that's it. It's over. We can now safely assume that the market's going to continue to move lower. We're going to move down to the old lows down there just above 4,100 here in the S&P, and that's a done deal. That's a done deal. Now we'll have another rally later in the year, but from now on, for most of the year, we have to be looking at this as the beginning of a very, very sluggish bear market, but a bear market nonetheless. As you can see here, we continue to drift lower. Purple predictor is negative. The Dow Jones, just it's nip and tuck between who's going to buy, between the buyers and the sellers as to who's controlling this market. And the Dow will continue to be, the strongest of the three major indices because it's composed largely of high dividend paying stocks. And there's a big demand for those stocks right now. So look for the Dow to outperform, but that means the Nasdaq is probably going to be the weakest of the three. Notice how much closer we are in the Nasdaq to these lows here than in the S&P and the Dow, where there's a lot of distance to go here. So this is very negative. Seasonality, it's all over. We're now into clearly what's generally a neutral period for the market. Not bearish, not bullish, just neutral. But the Dow Utilities, this is a bullish seasonal period, and you can see it's satisfying those conditions a lot. So be long Utes, be short the Nasdaq. Here's our seasonality. You can see we're just tipped over. The negative seasonality that we see till the end of June kicked in a little bit early, but now it's all the way down here. Now maybe we get a nice little rally here in July and early August, but then we get a fourth quarter rally. But right now, it's bearish. Asset allocation, money's coming out of bonds, because that's an even worse bear market than the stock market is. It's down more than the stock market. And then it's flowing into low-risk stocks. And I've been hammering on this theme now for months. Dividend-paying stocks, utilities, consumer staples, things like that. What do you not want to be in? Financials, technology, those areas, death. Global shares are also weak. I think if you're bearish, you're better off short global shares than U.S. shares. And we talked about this. We've beaten it to a dead horse. We're going to have a recession early next year, late this year. Here you can see the bonds just dying here. Look how the purple predictor collapsed even faster than the bonds did. Stay short bonds. Bond key factors, look at this. Everything's just skyrocketing. Everything is in the upper right-hand corner, which means that everything is wildly bearish for bonds or bullish for yields. Yields are going to continue to move higher. Dollar, woo, 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 woo. Now, the dollar's strong, and I've been telling you pretty much all along here, we want to be long the dollar or neutral the dollar. But I want to be long the dollar because the interest rates are moving higher in the United States than any place else in the world. In some places like China, they're actually lowering interest rates. But so what we're going to see is more and more money flood into the United States because it has a reasonably strong economy and higher interest rates than most other countries, and it's a safe haven. So that's pretty good. Now, one thing is, and we had this incredible key reversal on Friday. But take a look at this little green line. If you go back, when it gets above this line right here, this black line here, it happened back here, you can see the dollar stops going higher. Over here, dollar stops going higher. Well, we're almost there. So we may go into a pause mode here, but generally speaking, use that pause mode as a buying opportunity for the dollar. Now, if the dollar pauses, that can take some of the pressure off of gold. Gold actually did very well in the last week and broke out of what was really a pattern here, a rectangle formation, broke out. The volume was going down, so it was a legitimate one. And that would project that we could get gold up here. That's not a big move. That's not a big move. So I can't get really long gold. We made some money in Pretium. I'm sorry. Fully paid up members know we made money in gold here recently, but it was no big deal. Gold key indicators, 1 up, 2 down. This is not good looking. The dollar's strong, and if the dollar's strong, it's hard for gold to rally. Now, crude oil got down to these old lows. We've started to perk up. I think we're still in a consolidation. I don't really have a firm opinion here. Purple Predictor is bullish. But when I look at the fundamentals, I see balance. I see that's good enough. There's really no reason for oil to go up or down. Having said that, I look at the longer term fundamentals, and I think that there's a good chance of a strong rally to get back up to these old highs later in the summer, maybe June, July, something like that. But if we have a recession in the United States early next year, then crude oil is going to go back down to $40. Okay, so there's I think a good rally here near term, but down the road we want to be heavily short energy products. Bitcoin, just following the stock market. I mean, the Purple Predictor is bullish, and that's great, and I wanted to be long, but it's just drifting lower, following the Nasdaq. Okay, freebies. You know what to do. Hey everybody, Courtney Smith here, and I just wanted to kind of reveal with you one of my secrets of my success, and that is I use a website called stockbutler.com, and the reason I use it is because it saves me so much incredible time, and it was based on my forms of analysis. The Stock Butler was developed by one of my brilliant students. Of course, all my students are brilliant. You know that. And he designed it around my technique for fundamentally selecting stocks. So all you have to do is you come here, you go to rate, you go to best of the best. That's the name of the technique. And bingo, there's the list. And then, since there's only 4 stocks there, no problem. Go up to rate, go down here to advanced stock list. I usually change this to main E table, update the list. Anything in green, I'm interested in. Now, I know that these are fundamentally powerful stocks. Now, all I have to do is go find the correct technical entry and exit point. So, Stock Butler saves me a tremendous amount of time, keeps me focused on only the best of the best stocks instead of wasting my time on other garbage. All right, everybody. We'll see you later.